Morning, everybody. Good morning. Good morning. Today is actually Saturday. Let's see, January 17th. It is currently 8 p.m. my time, but it should be about 8 a.m. There in the East Coast. So we'll see who's able to join us because I know this is pretty early, especially on a Saturday. I usually don't stream on Saturdays, but I thought, hey, what the heck? I got nothing going on. So I'll pop on, check the news, and then hopefully just see what everyone else is doing. Surprisingly, there was a lot of news. I didn't do a stream on Friday because I had somewhere to be early in the morning. So I guess this stream is going to make up for it. I might even stream tomorrow, probably tomorrow night, my time, maybe 10 o'clock. So I'll give some of the West Coast people some time to get on. Still might be pretty early for a lot of people. But yeah, we got some news to cover. This is going to be kind of like an ad hoc type of stream. Just going to see where this goes. And then, yeah, we'll see how it goes. All right. So let's get into it. There is some stuff. Let's get into the stuff. All right. So, first up is over the last 5 days, it looks like the S&P 500 kind of traded flat. Didn't really do a whole lot. It looked like we had kind of a dip, and I forget what that sell-off was for, but there was a catalyst. There was a news event that kind of brought it lower, and then it just went back up, but then, kind of traded flat for the week. So nothing exciting there. For Bitcoin, stayed above 9,500. So right now we're hovering at that 9,500 line, but we had a really sharp increase to the upside. So that's good. We got through a lot of resistance on Bitcoin. So hopefully that momentum will keep going. We won't see this wild swing to the downside because that's never fun, right? That's never good. So we'll just see what happens. All right. So for gold, all right, gold actually traded down just a little bit. All right. 10 basis points. It kind of traded flat for the week. There was a major, well, not a major catalyst, but there was some news on the Fed. And I think that's probably why it kind of sold off. We'll cover that in just a moment. But yeah, gold has kind of just been chilling. Year to date, still not doing too bad. I mean, it's up almost 6%. Hey, Redfish. Hey, welcome. For Bitcoin year to date, we are up almost 10%. So that's good. And then for the S&P 500, we're up 1.19%. So, this is starting to show just a little bit moderate, at least for the first couple of weeks of, 2026, that we're in kind of like a risk on, type of behavior. But I really think we need to be a little more cautious as we continue to move. Right now, again, the S&P 500 is trading in this like pattern where probably within the next week or so. And again, on Monday, the stock market is closed. All right. So on Monday, the stock market is closed. But over the next 2 weeks, we'll see if the S&P 500 continues chopping up and down, or if it's going to have a break up to the upside and we continue this trend, or if it's to the downside. All right. And that will be very telling. That'll be very telling for where this market's going to head. Right. Just seeing a lot of kind of chatter out there for people who do a lot of technical analysis. They're predicting that, we're going to have that sharp decline like this month. Probably maybe the first week of January or February is where we're really going to see what's going to happen with the S&P 500. So, hey, good morning, Phil. Phil M. Phil M. So, all right, let's keep going, guys. So again, Bitcoin's doing its thing. So are there any BMNR holders out there? All right. I feel like I'm not the only one who's a BMNR holder. We got to talk about this. I don't know if anyone caught this live stream for their conference, right? So basically in a nutshell, and excuse me if my voice, comes and goes. I just had a cigar not too long ago, so excuse me there. But anyways, BitMine just had a vote, right? They had a big vote from their shareholders to increase BMNR shares, right? So following kind of that classic, MSTR playbook, to sum it up, dilution is the solution, right? Continue diluting common stock in order to raise equity for the purchase of Bitcoin. So BMNR does something similar, but the difference, at least according to what Tom Lee was saying, that is they don't want to just dilute their shares in order to acquire more Ethereum, right? That's not just the end goal. The end goal for them is to use that for opportunistic investments. So, it's not, again, the numbers seem really crazy. I think it was like 100 to 1, dilution, which is crazy. But, it's so BMNR can make further investments later on. And it really depends how you feel about that, especially if you're a BMNR holder. I own a pretty sizable amount of BMNR myself. I mean, I'm, nothing like 100K or anything, but I think I'm hovering at around 50. But again, pretty sizable investment. And this presentation, I had to digest it over the last day to really understand what was going on. Because I don't know. I don't know how I feel about it. I'm still kind of digesting it. I think it's a good idea what they're doing. I saw some posts, some X posts out there. People are comparing BMNR to the Berkshire, right? Berkshire Hathaway. We're going to go over the 4 pillars. But anyways, let's talk really quickly about BMNR's shareholder meeting. So they just had it. I'm not going to go through the video. You guys can check it out. It's a pretty long video. But there was something just really odd about this video. So they're talking, he was basically, and I'm going to summarize most of this for you guys. Again, you guys can go back and watch this yourself. But back in October, crypto had this $1 trillion liquidation event, right? Largest in crypto history, October 10th. And that's when Bitcoin just started tanking, Ethereum started tanking, and just nothing really ever came back, right? And then it continued on, right? He was just talking more and more. Bitmine is one of the most liquid traded stocks on the stock exchange, right? And especially compared to their kind of counterparts, their other Ethereum treasuries, they're just the largest, right? Largest, most liquid. This I thought was really interesting. So they had a plan, right? I think it was a 5-year plan to reach the alchemy of 5%, which is owning 5% of the Ethereum network. They're already up to 68% of that goal in 7 months. So that is a huge, huge achievement. That's a huge amount of progress that BMNR has made, right? Purchasing Ethereum. So I thought that was pretty good, right? I thought that was good. I like that as a BMNR shareholder. I want more Ethereum for my BMNR shares, right? That's pretty much the whole point. At least that was in my head when initially I started. And then I started to notice that just listening to, the X space and people on YouTube, we all thought that the point of BMNR acquiring all this Ethereum was, one, so it's an Ethereum proxy. It's a leveraged Ethereum proxy. But 2, they're going to eventually stake a lot of their Ethereum, right, on the Ethereum network to make or to get rewards, right? That would be accretive to investors. Maybe a dividend, who knows, right? But that was supposedly the big advantage that it had over something like an MSTR, where, MSTR is not going to be doing anything with their Bitcoin. They're just holding Bitcoin. Saylor said plenty of times that unless something drastic happens, they might have to do cover calls or some other types of derivatives on their own Bitcoin. But that is something way in the future. And that's in a super worst case scenario. So anyways, back to BMNR. So BMNR, again, on this whole alchemy of 5%, sounds like a sexy name. They're going to get 5% of the Ethereum. So then they can be a major player on the network. And they're, again, it's a pretty big achievement to reach 68% of their 5-year goal in 1 year, right? Under 1 year, right? They've acquired more cryptocurrency than Strategy has, in a couple of months over Strategy's couple of years, right? Of course, Bitcoin was a lot more expensive, yada, yada, yada. But again, this just shows how much Bitmine, or how fast it is gaining traction on acquiring more Ethereum, right? So anyways, he continues to talk. This is so they have the 4 pillars here, right? This is BMNR's kind of secret sauce, aside from their Maven, right? Their Made in America validator network. This one's supposed to be a big deal. But the whole secret sauce for BMNR, what's making them different than other Ethereum pure play treasury companies, or just a simple DAT, a digital asset treasury, is this, right? So they have the Maven project that they've been working on, right? They're a community participant. They're going to have the alchemy of 5%. And they have the Bitmine moonshots. So Bitmine moonshots is what we're going to be talking about here in a second. And this is what I found extremely just weird, like odd. And I'm still kind of like trying to digest it and come to my own like conclusion. But the Bitmine moonshot was basically an investment. Their recent one was an investment, $200 million into Beast Industries. You guys know who Beast is, Mr. Beast, right? That's who he is. And like most of the presentation was about Bitmine's $200 million investment into Beast Industries. So I was like, what? Like, this is weird, right? It's just, but BMNR has a couple other different investments under the belt. I believe they had a pipe offering, or some type of investment into WorldCoin or something like that, Orb or whatever it is. Which is headed by Dan Ives. If you know who Dan Ives is, he has a couple ETFs of himself, the Ives ETF, but he works for Wedbush Securities. But anyways, this was the weirdest thing. Like just listening to what Tom Lee was talking about and their case for investing into Beast Industries. If there's a bigger play here, I just don't see it at the moment. But back to the whole point or back to my earlier point, this is shaping up to be kind of like that Berkshire Hathaway play, right? Where Berkshire Hathaway had multiple stakes in multiple companies, right? And that just made, Berkshire stock all the more valuable, right? So some people were saying like, this is what, like, if you want to draw some similarities or have another example, that is exactly what kind of BMNR is trying to do. They're trying to have these moonshot investments where they'll appreciate over time, and that'll be good for not only BMNR, but BMNR shareholders. All right. So again, it was just like, to me, it was weird because the whole point, my initial thesis for investing into BMNR was for them to acquire Ethereum, right? And then possibly stake the Ethereum. And then of course, we're going to look at it in just a second here. But there's all these tailwind for Ethereum, right? Large institutions moving on to the Ethereum blockchain. So anyways, just wanted to put that out there because I just thought it was weird. Again, it was really weird. But anyways, moving on, he talks about Beast Games, how it's the #1 watched show in 80 countries and all these different things about it. Again, I don't watch Mr. Beast at all, or pretty much at all. I think I've maybe watched one video of his, and it was like brief. I know he's a pretty, charitable guy. He built a bunch of houses in like was it a South American country? I think. He's building tons of stuff in Africa too. I mean, he's doing a lot. Don't get me wrong. But anyways, the 4 pillars of growth, right? So optimize staking yield, pursue alpha strategies, which is the moonshot stuff. Mosaics, capital executes on alpha strategies. So Tom DeMark is a supposed crypto, super smart genius guy who was advising BMNR. I think he only has 2 clients, one of which is BMNR. But he was advising BMNR on when to purchase Ethereum. So Ethereum, BMNR kind of like slowly started purchasing later in the year of 25. They kind of slowed down their purchasing. And then they waited, I guess, as the price of Ethereum started to go down, that's when they could, pick up cheaper Ethereum. And that was, he attributed that to Tom DeMark. He's spoken about Tom DeMark a couple of times. So anyways, again, alchemy of 5%, yada, yada, yada. Let's see what else we got here. Yeah, so here's another, another thing. Maximize the yield on the treasury by staking Ethereum. Invest DeFi in moonshots. Again, I don't know what the potential is of Ethereum and Mr. Beast. And Sam Altman was supposed to be there. He wasn't there. He didn't even speak. I guess he didn't even show up. And then the same thing for Vitalik, who's the founder of Ethereum. He was supposed to be there. He was not there. So it was like a marketing rug pull in a sense. It was like really just, I don't know, guys. And then going back to this, right? This is the chart that gets everyone super excited, myself included, right? This is what, could, if Bitcoin was to rise, what would be Ethereum's price, right? In the future. Looks really exciting, right? You kind of get excited because if Ethereum hits like, I think it was like $12,000 a coin, which I don't know if it can even reach that. I'd be happy with 5 or 6,000. But if it could reach that, you know, what's that in BMNR, right? What's that reflecting in BMNR's price? So that it's just exciting, of course. Moving on. So yeah, the rest of this presentation was Q&A, and then just talking again, mostly Beast, right? That's his biggest thing was talking about these moonshots. So I don't know, like I'm still digesting this. I'm still trying to figure it out. Like, well, you know, is this a good thing, bad thing? I'm leaning on this is positive. We just have to give it time. I'm still bullish on BMNR. I have no intention of selling any of my BMNR shares at this time or in the near future. This is just, it was just a weird thing, right? But now I understand what the whole moonshots thing is, because when he made an investment through BMNR into WorldCoin or whatever it was, right? Orb, I think is the stock ticker. I made an investment into Orb, which has this WorldCoin, and I guess this WorldCoin helps, validate humans. You know, you are yourself. I don't get it. I'm not that deep into the crypto stuff. But that investment, that $20 million investment, I think 10x'd for BMNR, right? 10x or something like that. So again, that big deal, right? So I guess this other moonshot in Beast is another deal, and maybe there will be some cross collaboration between Beast and BMNR in the future. I have no idea; left to be seen. But I'm just patiently going to see how the next quarter or the next 2 quarters play out, not only for Ethereum but also for BMNR, right? Because again, a lot of people in BMNR just had this like mindset that BMNR was going to be this pure play digital asset treasury, right? It was just going to acquire Ethereum. We give BMNR money. They use that money and purchase Ethereum, put more Ethereum on the books, and then eventually stake it, right? And then of course you have the alchemy of 5%, which would make it a big player in the space. And then you tack on the Maven project. Plus they're doing a lot of work with Wall Street. So that was the stuff that I knew BMNR as. But yeah, anyways, let me get off that. So I just want to show a quick little thing of, companies or finance institutions that are moving on to BMNR or moving on to the Ethereum network, in case you didn't know. But you have JP Morgan Chase, which is, again, one of the more surprising ones because, Jamie Dimon has always been anti-crypto anything, whether it's Bitcoin, Ethereum, doesn't matter. He's always been anti that. So it was interesting to know that eventually JP Morgan Chase came around. You have BlackRock that's launched their USD, was an institutional digital liquidity fund on the Ethereum blockchain. Fidelity, a huge one, deployed its treasury digital fund on Ethereum. Citigroup is exploring a stablecoin for digital payments. You have Bank of America working on launching a stablecoin. BNY Mellon actively expanding its digital asset tokenization. Goldman Sachs is moving on to tokenized cash equivalent products and exploring stablecoins. You have UBS, Visa, MasterCard, Societe Generale, and State Street. So you have all these large institutions, these large players moving on to the Ethereum blockchain, right? So that would be bullish Ethereum. But I heard a very interesting analogy, and this might spook some people out who are under this bull case of, because of these tailwinds, that Ethereum is going to get more valuable, right? So this is coming from Lynn Alden. I heard it from Lynn Alden. I don't have the exact quote. If you don't know who Lynn Alden is, she's a huge macro analyst. You could YouTube her. But the question was, because all these institutions moving onto the Ethereum blockchain, why would that make Ethereum more important, right? That was basically the question I was asked. And her reply, and I'm going to butcher it, but her reply was, the stock market, let's say there's $13 trillion worth of stock, worth of stock market stuff, right? Just $13 trillion, right? And it's trading on, let's say, the NASDAQ. That doesn't mean the NASDAQ is worth 13 trillion, right? That doesn't mean the NASDAQ itself is worth $13 trillion. So that was an interesting kind of parallel that I found. I don't think it's going to deter me from getting out of BMNR. I'm still going to hold it. But it was just it was something that I'm including as a data point for my thesis on BMNR, right? On the reason why I would even invest or keep my shares in BMNR. So I just wanted to cover that because, again, that was a big one. Again, for any BMNR shareholders out there, I think you should absolutely watch this. If you haven't, come to your own conclusions, digest it, and then see if, you know, it's something you still want to be a part of. Because you really have to be, in these treasury companies, you have to be really bullish. Not only on the crypto coin that they're creating a treasury out of, but the management team, right? The management team to execute on the business plan, whatever that business plan is, you know, acquiring more of a coin, or in Tom Lee, BMNR's, you know, perspective, you know, growing through the 4 pillars, right? Or micro strategy, you know, coming out with more perpetuals, diluting the common stock, buying more Bitcoin, never selling Bitcoin, right? So that is pretty much the whole thing with investing into these treasury companies. There was a video of Saylor talking recently. I'm not going to pull it up, but man, he was so pissed when he was asked a simple question by the host. He was asked, why would someone choose a non-productive digital asset treasury company, one that doesn't make any cash flow, versus strategy that, you know, they make money off their software business and they just happen to be a software business that also holds Bitcoin, right? And Saylor just went off and was saying, like, that is an insulting question. That's a stupid question. That's an ignorant question. Instead of asking why is one better than the other, why can't you just be happy that companies are buying Bitcoin, right? That they're just adding the most productive digital asset onto their balance sheets, right? Why can't you just be happy with that? It doesn't matter whether they're making cash or no, or not, or how do they compare to strategy? So I thought that was a really, really good, interesting conversation. It was a really good perspective from Michael Saylor. Again, I think he's a net positive for the Bitcoin community, even though he takes a lot of flack from the Bitcoin maxis. I still think he's a net positive. I mean, I'm speaking from the perspective of someone who's not really like a crypto guy. You know, I'd only do Bitcoin and I would only do Ethereum. I wouldn't do any of the other altcoins or the shit coins or the meme coins. All right. So let's see. We got Skeptic in the house. Hey man, what's up? Welcome. He's putting on the yawn emoji. Yeah, it is pretty early for you guys. It is late for me. It's about 8 p.m. We have Retire on Dividends. What's up, man? Hey, welcome. Good morning. Let's see what else we got. Super Straight Guy. Hey, welcome back. Super de la Shun. I don't know what that is. Phil M says 900 shares of BMNR. I think I'm at like 9 or not 9. I think I'm at like 600-ish. And I honestly, during the dip, I wanted to buy more. But again, my exposure to both MSTW and BMNR and Bitcoin through IBIT is like so much that I can't. But I really, really wanted to buy more BMNR shares. Redfish says, Tom Lee said after mid-year is supposed to be the correction, if I'd heard correctly. Yeah, like the correction, I think it's going to be the correction for a lot of things. Mostly, I think equities. I don't know about like the crypto because, you know, there's talks of the 4-year cycle. Is it going to start this year? Is the halving just happened? There's all this stuff about crypto I don't know. All I know is I buy shares of IBIT every other day, and I'll just hold it and wait, right? That's pretty much all I know. And then, yeah, I'm just patient. I got like a 5-year time horizon on these investments. So I have no plans to get out of them. The only thing that would invalidate, you know, the thesis for this is if Bitcoin or Ethereum goes to 0, right? That's the only thing that would, I mean, I'd be forced out at that point. Anyways, so we're going to listen to a video. I think this is a really good video. Still a lot of waves in this bull market, says Carson's Group, Ryan Dietrich. Carson's Group, this guy just posted a market outlook called Riding the Waves. Recommend people check that out. We could probably even pull it up tomorrow or something, but it's a decent read. It's basically his bullish outlook for 2026. If you like to read, you know, kind of like how these fund managers are kind of like thinking, preparing what, you know, the trends they're looking at. But let's take a listen.
But Ryan Dietrich probably does. He is chief market strategist at the Carson Group. I'm kind of putting you on the spot, Ryan, but you know this stuff like, you know, better than anybody. It's been a pretty good start to the year for small caps.
Oh, it has, Sully. Thanks for having me back, and happy Friday. And hope everyone has a good 3-day weekend. It really has been. I mean, listen, it's been a good start to the year. You've just talked a lot about that. But the story of the year clearly has been the rotation, I wouldn't say away from tech, but into other stuff. And small caps have done well. Now, I'll be clear. With small caps, we have seen these fits and starts before. So we're not totally sold on that. But what we are sold on, kind of like you've had most guests today talk about, it's a global bull market. There's a lot of participation. One more thing here. Various advanced decline lines on the NYSE, the S&P 500 are all hitting all-time highs. Market breadth leads price. This is a still a healthy bull market and a global bull market, Brian.
Yeah, and you nailed it, as always. We've had these head fakes in small caps before. A lot of our viewers, listeners, they're watching, they're listening, like, I just don't know if I'm ready to pull the trigger on small caps yet. When will there be some kind of confirmation signal to you, Ryan, that this is real, or maybe it's not, and the small caps go back down? Is there any kind of a timeline that you look at?
Yeah, it's kind of like Lucy in the football with Charlie Brown, right? You think you're going to kick it, she pulls it away. It feels like small cap's been that way for a while. I mean, just simply looking at relative strength, like the Russell 2 versus the Russell 1000, we are seeing, some new highs breaking out there. But I don't like to say one or the other. We manage real money here at the Carson Group, like billions of dollars, and we are a slightly overweight, large over small. But it doesn't mean we're all small cap exposure. And look at mid caps. I mean, no one talks about mid caps. They're hitting all-time highs. I don't know if they did today, but they're hitting all-time highs also. So yeah, you can have different buckets here. But I mean, listen, if you really think the Fed's going to cut a little bit more this year, which we're not so sure about that, maybe you want to have a little more small cap exposure, but just kind of own a little bit of everything. Is our take here.
Yeah, you know what? And you're exactly right. And shame on me. Nobody thinks about Peter or Jan Brady. They just kind of get lumped in the middle.
Exactly.
Everybody's talking about Bobby and Greg and Johnny Bravo. So let's go to that. How much of that is Fed exposure? Let's say we don't get another rate cut this year. JP Morgan, I think, believes we won't. So let's say we don't. Then what?
Yeah, if we don't, hopefully that means the economy is stronger, first things first, but that would also probably mean those small and mid caps don't do as well. But we've mentioned mid caps, and we've overlaid mid caps with what? The S&P 500 equal weight, and that's a big theme we've been talking about here. The equal weight continues to go higher. I mean, just a couple of days ago, equal weight's up 0.5%, but the S&P's down about 0.5%. So that's, if my math is right, Brian, 1% outperformance. 318 stocks up last Wednesday, yet the market, quote unquote, was down. That's because of tech underperformance. But all in all, the equal weight, that's the story of the year. And again, mid caps tend to follow the equal weight, so that's maybe an area that we think is going to continue to be pretty well in 2026.
Okay, quickly, good start to the year generally portends good things.
That's exactly right. If the first 5 days are higher, like they just were this year, you're up like 85% or so of the time for the full year. And if January's higher, I know January's not over yet, then the next 11 months, Brian, are higher 87% of the time. Wow. That one's been on fire lately. It's been working. So we're not there yet. But listen, a good start to the year likely means this momentum is real. Fundamentals are solid. We just released, I know you're at the end here. We just released our outlook. We titled it Riding the Wave. And we think there's a lot of waves to this bull market, still suggesting you want to be invested in this bull market. Here, you've just talked a lot about.
So what do you guys think? What do you guys think? We're gonna head higher. This is a bull market all the way to 26 through 26. There's a lot of tailwinds. Aside from let's take the Fed out of it, right? Let's take the Fed. Let's take interest rates out of it. There's still a lot of tailwind for this market, especially for the S&P 500, especially for the Mag 7. Companies in the Mag 10 index, plus AVGO, Broadcom, Palantir, and I forget the last one. Damn, I always forget the last one. But anyways, yeah, there's still a lot of tailwind. You have the AI story still continuing, right? Still continuing. It's almost like you don't even hear anymore about bubble talk. No more about negative AI bubble talk. It's like it just died. It just died going into 2026. It's like January 1st hit and they stopped talking about it. The same thing happened last year when they were talking about all the AI's data, or the entire AI story changed fundamentally when China came out with DeepSeek. There's all this peak fear, all this news, all this negative news, and then it just died on the vine, right? It's so crazy, like how much news really drives investor emotion. And then people are like, they're basically getting you to sell out of the AI story. These huge names, Palantir, NVIDIA, Microsoft, Google, and semiconductor companies, right? They're just getting you to sell out of that so you can go and probably buy bonds or something, or buy some other, safer income, stock like a blue chip, right? It's just crazy, like what actually goes on in the market. But yeah, what do you guys think? Are we heading for highs? I mean, I'm still pretty bullish aside from the AI stuff. Aside from the semiconductors, right? Because the semiconductors are going to be needed. We're going to cover something really interesting here that just dropped. Skeptic actually put this in the community, so I want to cover it. But we'll be talking about this other ETF that'll be dropping, and it's more niche, it's more specific. So I think it's going to be interesting. But yeah, like there's a lot of tailwind. You have liquidity slowly starting to creep back into the market, right? You have quantitative easing is coming, whether we like it or not. Quantitative ease is coming. Whether the rate gets dropped or not, quantitative ease is going to come. That's going to flood the markets with fresh money. That's going to create a risk-on environment. I still think it might be a little more choppy, though. Still might be some volatile, months. Yes, it's a midterm, year, and there's a lot of talk about midterms being, down years or whatever, or trading flat. Left to be seen. It doesn't always happen that way. But again, it's just something to be prepped for. You have a lot of financial analysts saying that we're going to have this correction, but then the rest of the year, we're just going to pump higher. So like there's a lot of tailwinds, going here. So I'm not bearish one bit, and that's probably a fault of mine. Like that's probably, going to bite me in the ass eventually. It already has. I mean, October to December was brutal, but I'm still very bullish overall for the rest of the year. So anyways, let's move on. Let's listen to this. All right. So expect solid growth with less inflation this year, says BMO's Carol Schleif. And we're going to listen to something from Kathy Wood here in just a moment.
Now is Carol Schleif. She is Chief Market Strategist at BMO Private Wealth. And Carol, it's been a big week for earnings. We've got a pretty rocky backdrop. What do you think about where things stand?
Wins, if you will, aimed at the...
Sorry, guys.
Carol, it's been a big week
where you had some of the implications of the big, beautiful tax bill for both corporations and consumers coming through. You've got deregulation going on, which in particular is really helping the banks and aspects there. So there's a lot of things.
Sorry, guys, I'm a bad host. We got to start over.
Carol, it's been a big week for earnings. We've got a pretty rocky backdrop. What do you think about where things stand? I know you're somebody who looks at this, and over the course of the year, you anticipate that stocks will continue to climb.
Yeah, first off, thanks for having me, and happy Friday. And yeah, earnings have come in pretty well, if you will. I mean, there's a lot of other political wins, if you will, aimed at the banks and the financial services industry in general. But pulling through on some of the themes, the consumer stays resilient. Their balance sheets remain in pretty good shape. Companies in general are remaining resilient. And at least looking at the markets, you had a lot of the veggies first, if you will, in terms of tariffs and all the news early in last year. And we had to get a lot of the dessert coming at the end of the year, where you had some of the implications of the big, beautiful tax bill for both corporations and consumers coming through. You've got deregulation going on, which in particular is really helping the banks and aspects there. So there's a lot of things teed up to really be supportive of earnings, because it's important to remember, while markets advanced last year, so did earnings. And we'll see a lot more over the next couple of weeks how earnings come in. But we anticipate the attention that our companies have paid to really cranking down on their margins, or being very attentive to maintaining those margins, should really come through in terms of amplified bottom line growth in aggregate.
Carol, when you're talking about the pressures that have been brought up against the bank.
So just so you guys are aware, like she's bringing up a bunch of the tailwinds that are going to be good for this year. She brought up the OBVA, right? The one big beautiful bill, adding just a small $3 trillion, deficit onto our already bloated spending. But not only that, you have deregulation. Last year, Scott Bessing was talking about private credit, right? Because the big talk last year was, private credit funds. And he made the point, and I thought it was a very interesting point, especially coming from the Secretary of Treasury. But he made an interesting point that if private credit funds are doing so well, and they're having this big year, this expectation for big year, that means banks are highly regulated. So he wanted to focus on ways to make it easier to get loans, because companies, businesses, things of that sort, they go to private credit funds, they go to BDCs, they go to these, to get money, right? They go these other routes to get money instead of going to these banks, right? So that means that there's too much regulation on this, right? Or interest rates are too high or whatever, right? So his point was that he's going to be looking at finding ways to make it less to make investing in private credit less incentivized, or to make it so businesses don't go to private credit funds. Instead, they will go to like banks, right? So I thought that was just an interesting point. Again, just, more favorable tailwinds for this year, less regulation. So that should reflect in companies, right? So let's continue listening.
Banks and the financials this week. You mean basically the president's call for a cap on credit card interest rates that they can charge consumers?
Yeah, there's that piece of it. Although you've seen a lot of the banks, I would imagine what they'll do is they'll probably try to get together and figure out how can they take a step towards something that benefits the consumers, if you will, because it's pretty tough if you're a bank to come in reporting record trading revenues, record M&A revenues, and record revenues in a lot of other parts of the bank, and then insist that you can't necessarily give somewhere on credit card rates or the things that consumers are doing. So I would imagine there'll be some sort of a lot of conversation around that about how do we preserve margins and growth and things that way and still move forward towards being more attentive to the rates we're charging consumers.
If those were to go through, there have been some concerns that, or at least the bankers themselves have said, they're just not going to lend money. They're not going to allow credit cards to be taken out by consumers. I spoke with Brian Moynihan from Bank of America the other day. He said anybody who's not well into the 700s in their credit score wouldn't have access to credit cards. Is that a broader concern for the economy, or do you think that this is just not going to happen?
So in case you guys weren't following, the whole Trump administration is trying to put a cap on credit cards, 10%. And it was an interesting point that, if they were to do that, then credit card companies are just they're not going to give out money. Right. So I don't know. There's a lot of debt in credit cards. I think Americans are highly in debt because of credit cards, right? We have a spending problem. We all do, right? We put everything on a credit card. Those of us that have credit cards, it's just, pay with plastic, right? You don't have to use real dollars. You could always, pay it monthly, right? Meanwhile, they're stacking on 25, 35% APR onto that amount that you owe. And it turns into like perpetual slavery because you always have to pay off the debt. You're never going to get out. So putting a 10% cap would take some of the pressure off for just average everyday Americans that need money to live, right? Need money to buy things like food. So it would be good. But, that doesn't really incentivize some of these larger banks, right? So it was interesting. It was an interesting topic, right?
Well, I think it's a concern for the economy, but it's also important to remember that it's those top end consumers that are doing something like half of the consumption, which relates to about 1/3 of GDP, comes from that top 10%. And that top 10% tends not to revolve their credit. So, and a lot of the reason they're spending relates more to where their asset values have gone, if you will, than where their employment is. So that piece of it in aggregate is probably pretty steady, but it is the other tiers, the other 80 or 90%, if you will, that do revolve, and there's issues there. And there'll be issues most likely if that continues, if you tighten up credit there, either you shift some of it to the buy now, pay later industry, or the access to purchasing and stuff dries up. So there's concern among some of the consumer companies from that perspective, especially those that are more heavily weighted towards those segments.
Man, it is still crazy that you could, buy now, pay later on a Chipotle burrito? Like, what is it, using Klarna? I haven't been back to the States in a long time, but I just read these things, I hear about these things, and it's ridiculous. It's so crazy. Like how it is the trap, right? Buy now, pay later is an absolute trap for everyday Americans, for people who are not, I'm going to just say it, financially literate. They don't understand the future consequence of this buy now, pay later stuff. And, plus using credit cards irresponsibly or responsibly, you lose your job, you need to pay bills, you need to, get food, you need to keep up. It is still, the high interest rates put people back so far, and it's like just pressure upon pressure upon pressure. So, capping it at 10%, could it be good for American consumers? Could it be good for average Americans? She just said that, the top 10% of, wealthy individuals in America, they're the ones doing 50% of the consumption and adding huge amounts onto GDP. I don't know. Like, I don't know what the right story is. But anyways, I don't know what the right answer is. Anyways, guys, we're going to move on from this. I just wanted to cover this real quick because I think it's really interesting to at least know what's going on in the, not just with stocks, but, kind of the broader economy. This popped up Copper prices pull back from record high. Goldman says rally has already played out. So I am invested in copper. I opened a position probably about a week ago. I want to say maybe a couple days ago. And, you know, I just been doing my own kind of like, you know, due diligence on metals and things like that. So I started some starter positions in metal funds. You know, I probably say this all the time, but, you know, shout out to Victor if you're listening. Always appreciate your help and guidance. Evil Duck, you're in the Discord. Appreciate your help as well. But yeah, copper, right now, Goldman Sachs is saying copper kind of peaked and is going to be falling back down to earth. Copper has had a crazy, crazy run up. This chart doesn't look like it, but it really did. It really did have a pretty good year, right? All things considered. I mean, if you zoom out a little bit, I saw a different chart. Hold up. I saw a different chart. Maybe I'm screwed up here. No, this is copper. Okay. But anyways, yeah, they're saying that copper kind of peaked. I don't think so. And the reason why is because I think with all the data center build out that's happening, you're going to need copper. You're going to need copper for wiring. So I'm not going super heavy into copper, but I am getting exposure to copper. But anyways, yeah, year to date, you know, it looks like it's almost down. It's almost chopping sideways at this point, but I still think that there could be some upside. Let's read. Goldman Sachs analyst said that they see a much sharper fall ahead, forecasting the LME copper price falling to 11K a ton by year end 2026, as copper market fundamentals have been deteriorating in recent months, with global inventory continuing to rise, scrap supply increasing, and demand underperforming expectations. We hold the view that the bulk of the copper price rally has already occurred and that copper price is increasingly vulnerable to a correction. And the recent moves were largely driven by speculative inflows. That's probably true, especially now. You know, people like are seeing the gold and silver just go up like crazy. So everyone's like kind of hopping into all these other metal plays. I'm not going to lie. I'm kind of part of that FOMO myself. It is not part of my core competencies. You know, the metals sector. So I'm kind of, I would say, dabbling in it. I do have a decent position in gold and silver, mostly a huge gold position. But yeah, anyways, the Trump administration's decision to hold off on imposing tariffs on critical mineral imports and focus on direct negotiations and price floors also may lead to lower premiums for U.S. copper, Goldman said, although high prices of 13K likely will be sustained through quarter one, as uncertainty surrounding U.S. refined copper tariffs remain. All right, so there was a whole thing again with China last year where they were talking about critical rare earth minerals, and then, you know, it got kind of put on hold so that, you know, the United States and China can continue doing their negotiations. I don't even hear about it in the news anymore. The negotiations between the two countries. Many analysts remain bullish on copper, pointing to long anticipated supply shortfalls as use of the metal in new energy and artificial intelligence sectors, revised demand, lost to China's property crash. All right, so there it is about copper. So if you're interested in learning about copper, I think it's interesting, especially how it plays onto the bigger theme out there, data center, AI. So, you know, you could get exposure to that, you know, looking at a couple of copper plays. And they listed a couple down here. You have CPER, COPX, and JJCTF, which I don't even know what this one is. I'm not familiar. Yeah, I'm not familiar with that one. But anyways, yeah. Looking at copper. So we also had gold. Gold turns lower as Trump says he may not pick Hassett for the Fed chair. This was huge news because everyone was kind of assuming it was going to be Kevin Hassett, who's the National Economic Council. National Economic Advisor. Everyone thought it was going to be Kevin Hassett. I thought it was going to be Kevin Hassett because he's extremely close to Trump. But with that recent thing with Jerome Powell, the DOJ, investigating them, and then you had the DOJ you had the Trump administration, the White House, kind of beefing with the DOJ, saying that you blindsided us, essentially, that they blindsided the White House with this investigation going public, right? Looking at just a couple other, pieces of content out there, just reading on X and things like that. I'm not trying to bring politics into this. This is kind of like a politics-free channel. I'm just looking at, kind of what's out there, the facts. But yes, if Jerome Powell is found guilty, he's found guilty, right? Period. Like point blank, if you commit fraud, you commit fraud. However, perception is reality, and it does look like that this was going to create a shadow Fed, right? That the whole point was to get rid of a political opponent and install a shadow Fed, right? Kevin Hassett, who's just going to do whatever the Trump administration wants, right? And I heard a case for a shadow Fed, which is crazy, right? Like I heard a case for a shadow Fed. Why having a shadow Fed would be good, which is kind of crazy to me. But basically the case for the shadow Fed was that you have the Federal Reserve that works off of really old data, month-old data, right? Or if the government shutdown happens, months old of data. And you have the Trump administration or whoever the current administration is, doesn't matter if it's Republican, Democrat, doesn't matter who's in the seat, right? But you have that administration that is trying to look forward and they're trying to get these policies in place, whether they're doing financial warfare or not, they have, a current operating picture of what they're trying to do. And the Fed has to kind of guess, right? Or catch up to what they're doing. This is explained like during April when the tariffs happened, the Fed was basically paralyzed. They were stunned. They had no idea what to do. They couldn't lower rates because they didn't know if inflation was going to come back. They didn't know what the impacts of the tariffs were going to be. So they had to wait, and it put us in this waiting mode for a very long time. So I thought it was a really interesting case for a shadow Fed. Of course, the markets, last time something like this happened, the markets were pretty vocal about not having a shadow Fed. That Fed independence is paramount, not just for the United States, but for global markets. So the case for a shadow Fed was really, really interesting. I'll have to, maybe I could pull up the video for tomorrow. But yeah, I thought that was really cool. It was not really cool, but it took some guts to come out and say like, I'm for a shadow Fed. So I thought that was just really cool. Anyways, gold futures fell on Friday after President Trump indicated he may not nominate his top economic advisor, Kevin Hassett, as the next Federal Reserve chair, casting more doubt over his search for the next head of the central bank. The controversy over the Department of Justice criminal investigation of Powell has sparked a backlash on Capitol Hill and is making it harder to confirm Hassett, who is distinctively close to the president. Evercore ISI analyst Krishna Guha said in a note, Warsh is trusted by the Senate Republicans and would be much easier to confirm. That's Kevin Warsh. All right. Geopolitical tensions appear to ease as protests in Iran subsided. Sad event over there. If you guys are following it, I think the estimates are about 12,000 dead in Iran over the span of like 2 or 3 days. The U.S. was about to, do something, and then they backed off. But if you're interested in geopolitics, it would be interesting to know that there is a carrier strike group heading towards that region right now. So maybe we'll hear something, right? It's supposed to probably be heading there and being on station probably in the next day, if anything. But yes, a carrier strike group is on the way over there. Usually, when a Navy carrier strike group, composed of usually aircraft carrier and several destroyers, probably a few submarines is headed anywhere to any region in the world. It's not for, to get some sun, right? It's not there for playing. So we'll see what happens. Maybe there is a potential for something else to happen. That last event that happened, it was quick. It was over and done with over a weekend. So it didn't really spook the markets as much, right? Usually bad news happens on a Friday and then good news on a Sunday, right? And then the markets usually do well on a Monday. So we'll see next week how this all plays out. If the United States does intervene, in any way, in the Middle East, right? But yes, I think it's important, again, geopolitics, understanding what's going on in the broader world to understand, kind of how the stock market reacts to that kind of stuff. Anyways, the U.S. and Taiwan struck a trade deal that lowers tariffs on many of the Taiwan semiconductor exports and channels new investment into the U.S. tech. I think it was like 150 billion. We can cover that a little in a bit. Excuse me. Meanwhile, silver slipped as Chinese regulators moved to cut down on high-frequency trading, ordering bourses, including the Shanghai Futures Exchange, to remove servers operated by high-frequency traders from their data centers. That is pretty crazy. I was talking about this in the last stream, but and someone used the correct word, market manipulation, but it does seem like there was a lot of market manipulation happening in silver. So this happening is probably them just trying to kind of calm the noise down, especially with the high frequency trading silver that doesn't exist. Again, I'm not super deep into the metals, but that is kind of the sentiment that I gathered or from my observation. Silver is vulnerable to a sharp correction, JP Morgan analyst said in a note citing mounting risks, including loosening ex-US supply, ETF outflows, softer industrial demand, and tighter Chinese trading curbs. All right, so if you guys want to check out some of these ETFs that are metal related, again, these are all at the bottom. I'll say for right now on this, I do own a little bit of SIL, SIL, which is the Global X Silver Miners ETF. And let's see if it is listed here. Of course, I have GLDM as my hedge for the debasement trade, and GDX. I do hold some GDX in my portfolio. So you guys can check those out if you are interested in a little bit of exposure to gold miners or silver miners. All right, so moving on. I think we could probably, let's just listen in.
Big moves in the odds. Kevin Hassett odds plunging. Here's what the president said just moments ago at the White House. Listen.
I see Kevin's in the audience, and I just want to thank you. You were fantastic on television today. I actually want to keep you where you are, if you want to know the truth. Kevin Hassett is so good. I'm saying, wait a minute. If I move them, these Fed guys, certainly the one we have now, they don't talk much. I would lose you. It's a serious concern to me.
So it would appear that his odds just went down of becoming the next Fed chair because Trump was praising him. Here's Kalshi.
Wow, look at that move.
And big move lower.
It's hard to make out there, though, but I see, okay, so Warsh.
Wow, Warsh.
Just isn't it crazy that we live in a time where you can bet on government politics? Like, you can actually bet real money on politics without using, like, some guy in a freaking alleyway or anything. Like, this is all on the internet. This is just crazy.
Beneficiary would be Warsh.
Big.
Yeah, 59%. And Waller, I would think, would move up a bit on this as well if he's still in the running. It's ironic. Kevin has been maybe auditioning on these television interviews, and he's doing such a good job that, Trump made the right, All
right, we'll move on. We get the point. So Kevin Hassett may not be the next Fed, which, again, is probably going to be a good thing. I think the markets will probably react positively to that, so we don't have a shadow Fed. Kevin Warsh is probably more easily digestible for not only the markets, but to get confirmation. All right, so let's see what time it is. Yeah, we're running pretty lean here. I don't want to take up too much of your guys' time. So we'll try to finish off real quick. So Trump to push for emergency auction to get tech firms funding new power plants. Big deal, because basically what this is, instead of, the government stepping in and doing any type of funding for these power plants, they're going to make tech companies do it, right? They're going to make tech companies step in, pay up the money, the investment into America that they're supposed to do. And this should help, bring down some of those electricity costs. There's not enough electricity in America to support the average American citizen household, power cities, and power these data centers, right? So the power is a big deal right now, a big deal. All right, so this is probably a good sign just in the overall macro thing. Again, there's a lot of ETFs out there that deal with power and power infrastructure. So if you want like real assets, which if you're a believer of the debasement trade or kind of this government super cycle theory out that's starting to form out there, then real assets would be something you would include in your portfolio. I don't have anything related to power. I don't think I'll be owning anything related to power, to be perfectly honest. But in case you're interested in that, or you want to kind of hedge against that, then you can look at something like a PWR is one. We covered one on the last stream. I think we covered one on the last stream that was really good. I don't even remember what the name is. Skeptic has so many of these ETFs. Moving on, Micron breaks ground on a $100 billion New York mega fab site. This is a huge deal. Micron has just been on this absolute tear. You guys can check here. Over the last year, up a huge amount. I think it was like 240% just over the last year. Micron is a memory maker. So them, SK Hynix from South Korea and Samsung Electronics, they are basically the market when it comes to memory. All right, so Micron is building this huge fabrication plant. So this should be good for Micron. This is going to create jobs over there. So, good there. Moving on from that, I think this is a really interesting play right here. and it's something I'm going to keep an eye on. I don't know if I'm going to buy it or anything else. I'm just interested in it because you have the semiconductor space, right? You have SMH. SMH is that ETF that a lot of people know. You have Chippy, right? Chippy's out there, you know, for income. But you have SMH, you have SOXQ, you have SMHX, right? Semiconductors. But if you look a layer down below that, you have memory, you have DRAM, right? So Roundhill is coming out with a ETF focused on memory. I don't know if there's any other ETFs out there for memory. If you guys know about one, you know, put it in the chat. But this is the first one that I've seen personally. But this one just looks interesting because this has been in the news quite a bit. So in case you guys are wondering, you know, about memory and why is it so important, or at least understanding the companies behind it, we don't have to look too far. You know, we just saw Micron, I believe it's up, like I said, about 240% over the last year. If we look at SK Hynix, which is a South Korean company, we look at the 1 year, it's up 252%. So these memory companies are becoming extremely important to the whole AI story, the whole AI play, to consumer wearables, consumer devices, your iPhones, your computers, your laptops, your servers, right? Servers that are going to be powering this stuff. So, you know, this could be an interesting play if you want exposure to something a little more niche than semiconductors, right? Just for some context here, there's only 3 main producers of DRAM, okay? And that is Samsung Electronics, SK Hynix, and Micron Technology. And if you look a layer deeper than that, there's silver, right? These companies need a lot of silver. I thought I saw an article, and I didn't think to pull it up, but I thought I saw an article that Samsung Electronics was working on just owning shares in a mine that mines silver, right? So that they would just have direct access to silver because silver is becoming harder and harder to get. So again, just looking at the broader context of things, I think people should just be aware of that stuff. All right, so I think that'll probably do it for us. Yeah, we're just going to skip all this other stuff. This I just want to cover real fast. So U.S. threats of Greenland takeover spark talk of a trade war. This is a big deal. One thing I found really interesting in here, Trump has said that the U.S. needs Greenland for national security reasons. Analysts told CNBC that he wants to keep rivals out of emerging trade routes and potentially mining of minerals that are critical in industries like defense. All right. So why is Greenland important? It's not just because we want to place a bunch of new bases over there. It's not just because we want to, you know, have a couple, you know, missile sites, a couple Patriot batteries over there. It's because Greenland is sitting on a ton of critical rare earth minerals, right? I think that's my at least thesis, my hypothesis for why Greenland is all of a sudden so important. Now, whether I support, you know, us taking Greenland, the United States taking Greenland or not, I mean, that's way above me. I'm just some YouTuber. But, you know, what would that mean for metals? What would that mean for the metals market, right? What would that mean for the miners that are going to that could potentially go into Greenland and start mining this stuff, right? What would that look like? What metals are in Greenland? So you guys can do a quick Google search to find that out for yourselves. But I think it is a very important, you know, topic that's going to be coming about. Right now, they're meeting over the weekend. I believe the Dutch and U.S. envoy. So they're talking about what's going to happen. And then NATO or France or someone, they sent a bunch of troops already to Greenland to kind of like be the stay force away from or to kind of deter the United States from invading Greenland, which is crazy. It is crazy we live in this time. All right, guys. I think that's going to do it for me. I can drone on and on. I don't think this stuff is really all that important here. But yeah, I think that's going to do it for me, guys. I've been ranting on for about a whole hour. But yeah, there's a lot of news that happened on Friday that I didn't really get to cover. So I wanted to cover that. So just checking the chat. I missed this, but Grumpy Toad said he was delivering Uber Eats. Man, I'm actually pretty damn hungry now. So don't cry, you know, stay focused, all right? Redfish says Gamers Nexus just did a video of a Chinese repair shop specializing in graphic broads and designs. It's amazing what Chinese can do. Yeah, absolutely. 100%. I saw, to your earlier point, Redfish. I saw this article that came out. Quen Boss says Chinese A models have less than 20% chance of leapfrogging Western counterparts, despite China's 1 billion AI IPO week. Capital close. I'm just all over the place. Capital can't close the gap alone. So basically, the article goes on to say why Chinese AI models can't just leapfrog over U.S. based. I'm still going to bet on America. I mean, me personally. I think the Chinese get too much subsidies in their companies, which make them look better. And not only that, I think Chinese companies, they have too much regulation, too much red tape. It's hard for Chinese companies to really innovate because they have so much government interference. That's just my thoughts, right? That's just my thoughts. Whether that's a reality or not, I don't know for 100%. I will say for a fact, though, I went to this car show recently, and it was an electric car show with a lot of Chinese cars. And I think they blow Tesla out the water, 100%. There's nothing cool about Tesla. Not only that, but these Chinese cars are cheaper than a Tesla, right? Than the most economical Tesla, and they have all the same features. I think that some of these Chinese, EVs are just fantastic compared to, some of the American-made EVs or even the Teslas. So it is just weird. I don't know. Like I when it comes to China, I'm always weary of Chinese companies because one thing, again, they have so much government interference. China is really good at copying. Not so much when it comes to innovation. Just my thoughts, and just based on his history, as I know it and understand it, it's been hard for the Chinese to innovate. They usually end up copying American technology or stealing American technology in order to compete, right? But yeah, I take Warren Buffett's kind of approach, and I'll never bet against America. I just will always bet on America because of the capital market we have. We have a free capitalistic market, right? Where the best companies should survive and the bad companies should die off, right? That's just the way it should be. Of course, we also have our own government interference when it comes to banks because now we have the too big to fail banks, right? And then you have the government interference coming in and saving their butts. So yeah, I guess the knife cuts both ways. But yeah. Yep. But yeah, guys, I think that's going to do it for me. Like I said, it is about 9 p.m. my time. I'm going to do another stream tomorrow. We'll probably do just, maybe coffee hour your guys' time. Since the markets aren't open Monday, I don't know. Maybe Sunday will be kind of like what to prep for. Maybe I'll do it on Monday. I'll probably do a Monday stream. But with that being said, guys, you guys have a wonderful day, right? A wonderful morning, wherever you are in the world. And I will see you guys in the next stream. You guys take care, and thanks for joining me, all right? Take care.